Hi, this is Farzan Ghadially, your finance expert. Today at Midday, we are going to look at where should we invest in these very turbulent market conditions. We've seen a lot of geopolitical uncertainty over the last few weeks. The invasion of Ukraine by Russia has caused a lot of harm and devastation to lives, livelihood, as well as the world economy. The world has recovered or is trying to recover from the COVID shock it really got in the last 2 years. And just as the economy, Indian economy and the world economy is getting back on its feet, we have a devastation in terms of geopolitical events of the Ukraine invasion by Russia. So what should investors really do? What we've seen in the last 3 years, 2019, 2020 and 21, we've seen a trending market. What is a trending market? A market in which if you really bought a stock or put your money in a mutual fund, it went up. Whether it went up 10%, 20%, 30% was relative, but everything really went up. However, 2022 is more of a volatile market. A volatile market in the sense we will really see days or we'll see a couple of weeks where the market will look really bad, very bearish. And then suddenly we'll see periods where the market will really go up. So investors need to be very careful of the volatility. Investing money in the market is going to get harder. It is not that investors will not make money, but overall creating wealth will be difficult. Historically, it is really seen that world over, if we've had 3 great years in the stock market, we've had 2019, 20 and 21, the subsequent year, the fourth year, you will not really get positive returns. When we started off 2022, the risk that the present stock market and overall economy really has is manifold. One is the geopolitical uncertainty. In emerging markets like India, we may not really have a big direct impact in terms of war or casualties in terms of lives. However, in this connected world, we will really see the effect. Let's look at the price of crude. It has touched about $140, and that's going to hurt emerging markets like India, where a large proportion of commodities are imported. So today what we really see is what we are seeing is an inflation spike that is taking place. Commodities are becoming expensive. Steel is becoming expensive. Palm oil is becoming expensive. Soft commodities like wheat, which is a staple diet for millions of people, is becoming very expensive. So this leads to a very big inflation risk. The present economic condition is a real nightmare as far as the policymakers are concerned. We are really seeing commodity prices go up. We are really seeing interest rates go up. And we are seeing the world GDP or overall GDP come down. So it's a very difficult situation as far as policymakers and governments are really concerned. What portion should be passed on to the public? Because that will result in price inflation or Mehngai as we call it. It is very difficult to really look at it. So we are in a very precarious position. The second biggest risk is as far as the Federal Reserve is concerned. What is the Federal Reserve doing? They are really increasing the interest rates now. It is anticipated that 6 to 7 times is where the Federal Reserve will increase the interest rates. When interest rate increases, which is anticipated to increase 6 to 7 times in 2022-23, what really happens is liquidity shrinks. When liquidity shrinks, foreign portfolio investors, which are a major part of investments as far as even emerging markets like India is concerned, will withdraw or sell in Indian equities. So this will result in a large outflow. Today, India is in a better position with a large foreign exchange reserves. Today, the Indian foreign exchange reserves are as high as 20% of GDP. That gives us a lot of buffer as well as time in case there is a sporadic increase as far as interest rate by the Federal Reserve is concerned. Also, when liquidity or interest rates are increased by RBI, what will really happen is the sectors which are dependent upon interest will get affected. So interest rate is a very big factor that we are really looking at in 2022-23. Third, but the biggest risk is inflation. When the stock market crashes or the stock market corrects, the percentage of people that probably directly invest in the stock market in India is about 4 to 5%. You put all the indirect investments through various vehicles like mutual funds and other structured products that comes into India is not more than 8 or 9% of the Indian population, total Indian population. But when prices rise, when wheat prices rise, when oil prices rise, when commodity prices rise, the common man will get affected with this kind of price rise. When this price rise of soft commodities, agro commodities really increases, is where the situation is going to become precarious. So a large part of the population that had just come out from the COVID shock were getting jobs, the economy was opening up, now suddenly will be faced with the scenario that we will really look at is higher inflation. So that is a very, very precarious situation that our Indian economy will get into. When foreign investors really invest into the Indian markets, they will look at Indian markets as a basket of emerging markets. Now, when you look at Indian markets as a basket of emerging markets, Indian markets have always been slightly expensive on valuation. Why is that the case? Because today, India is the consumption capital of the world, a very stable government, and really it has the outlook to really grow. However, if you really look at the valuations historically, today valuations are very expensive. We are at about 1.5 times greater standard deviation than the mean valuation. At one time, we were trading 2 times standard deviation compared to the mean. So valuation compared to other Asian markets is expensive. Today, 23rd of March 2022, we do not have a lot of data. There is a severe lockdown imposed in a number of Chinese cities due to COVID. A COVID wave is really raging in China. We do not know whether the lockdown will last for 7 days, 10 days, or longer. If the lockdown lasts just for a week or two, it's fine. But if it goes on for a couple of months as it had earlier, again, the global supply chain will get affected. When the global supply chain will get affected, we really saw what happened in the last 24 months. It would really lead to price rise and unavailability of key material that is there. Along with this, we already have a problem of geopolitical instability that is really there in major part of Europe. So both these factors together will be a very difficult combination for the world economy and the stock markets on the whole. We'll have to wait and watch what the situation in China is, and we'll have to really pray that it is not as severe as what reports suggest at present. Just as we've looked at the risk factors, the Indian economy is well poised. What are the positives that we should really look at? First is the political stability. At present in March, we had results for 5 state elections, of which 4 state elections were won by the ruling government that is there at the center. What does it really indicate? In terms of political stability, that the run-up to 2024, we would see continuity in government. The indication is really there, and thereby there'll be no sporadic policy changes. That is what really investors look at. So that's the big positive. If you really look at the forex reserves that the Reserve Bank of India has, Reserve Bank of India has done a fabulous job. Today, we have a lot of forex reserves as high as about 20 to 23% of GDP. Hence, any rush of money to even to an extent of $60-70 billion, probably in a month's period or so, month or two, we can really absorb that. So it will give us adequate time to deal with uncertainty, if any, that is really there. Also, most importantly, if foreign portfolio investors keep exiting the market, today, large number of retail clients or retail investors have really stepped into the stock market directly. Thereby, a lot of money, small amounts of money, 40, 50,000 per investor have really come into the market. But let's put the math together. We have approximately almost 2.5 to 3 crore demat accounts that have been opened with these small sums of money, which in total makes it a very formidable amount as far as the stock markets is concerned. Hence, even if the foreign portfolio investors would want to sell a large portion, probably in a short period of time, the Indian stock markets may not get impacted very badly. So today, the retail investors are a very, very potent and very helpful force as far as the overall liquidity in the stock markets is concerned. So keeping this in perspective, what should investors do? Investors should really look at a long-term perspective. Investors shouldn't look at investing for 5 days, 15 days, and 1 month. You will not have a trending market that you invest in a stock today and in a week, 10 days or 15 days, you will see results. You may see a correction if you buy into a company of 10 to 15%, maybe for a week, maybe for a couple of months. But if the quality of company and it's run by a good management, it will really show results. At the same time, you will really have days where it looks absolutely good. Say in a couple of weeks, 1 week, 2 weeks, 3 weeks, probably the war will end, or it will come to a stage wherein some kind of agreement between Russia and Ukraine will be reached. The market will rally probably a few thousand points in just 3 days. So should investors really feel that it's all over? The worst is behind us? Definitely not. Because please remember, the war may end. However, the sanctions that have been imposed on Russia are here to stay. What have we really looked at? Once sanctions are placed on a certain nation, it takes a long time for those sanctions to really come out. The Trump administration is no more in charge as far as United States are concerned, but the sanctions that they put across the world are still really there. Hence, due to this thing, even if there is a ceasefire or peace, investors shouldn't really feel it's all over and the worst is behind us. Inflation will catch up in the month of April, that is the first quarter, April, May and June. You will really see corporate profits lower in the first quarter compared to the last quarter this year. Hence, investors shouldn't really feel overexcited when things look positive. At the same time, shouldn't really panic when things really look bad. Things will have its day. It will take over a period of time in a volatile range. Remember, as far as India is concerned, the growth story has just started. India has a lot of potential only if you want to invest long term. Short term investing is something that one shouldn't really look at, especially in this period where commodities are rising. There is geopolitical uncertainty there. The commodity super cycle that is started will not last long. It may last for a couple of months. The impact may last for a year or so, and things will settle down and companies will get back as far as the profitability and growth is concerned. So in short, investors should really be cautious, should be patient, shouldn't panic, and stay invested for a long period of time. There would be days in which it looks really bad. There would be days where the market looks really good. The key is stay invested long term and be patient. Till we meet next time, be patient, stay invested, and remember the Indian growth story has started. Okay, we have phenomenal policies as far as India is concerned. When we really look at Atmanirbhar Bharat, is self-resilience. Every country around the world today wants to be self-reliant. What will change after the Russian crisis that has happened right now is the dependency on the dollar may change. A lot of nations may not want to really keep trading in the US dollar because they have the ability to impose sanctions on your nations. So this is going to be a fundamental paradigm which will create volatility for the next few weeks, next few months. But when things settle in, I think the Indian growth story will really shine and there'll be a lot of wealth creation. If investors stay invested, I think more wealth will be created in the next 10 years compared to the last 75 years. So stay safe, be confident, stay invested, and remember the Indian story has just started. Thank you so much.
Subscribe to Midday India. Get direct notifications on all our videos by clicking on the bell icon.